Well, hello. This is Nicholas Redding. I'm the Executive Director of Preservation Maryland, and we're very pleased to have you join this online webinar today. And glad to have everyone coming onto the line now. I see a bunch of people dialing in. And just a little background on who we are very briefly. Preservation Maryland is the state's oldest and largest historic preservation organization. We were founded all the way back in 1931. And we focus our efforts on advocacy. We fight for places. We fight for good policy and funding. We do a lot of outreach and education, of which you are hearing right now. And we run a large event every year, Preservation, effectively the conference for the state of Maryland, and it's called the Old Line State Summit. And this year it is taking place in Annapolis, which we're very excited about. And information about that is on our website. And we also have a funding program called the Heritage Fund, where we actually provide direct grants to organizations that are taking on preservation projects. All of that information and more, of course, you can find at our website at preservationmaryland.org. And we also just recently launched an online contractor directory called Preserve List. So if you're looking for companies and contractors that do the kind of work that we're going to be talking about today, you can find a bunch of them there at preservelist.org. So today, this workshop on Maryland's Historic Tax Credit Program is funded in part by the Rural Maryland Council, which made this possible through a grant through their funding authority. So we're very pleased to have their support. Today, we're going to be hearing from two consultants that Preservation Maryland has hired to walk us through this, who are very well versed in Maryland's Historic Tax Credit Program. And they're two architects with the firm of Encore Sustainable Design, which is a Maryland-based historic architecture group. And we're going to be hearing from Nikita Reed as well as Ward Bucher, who are both with Encore Sustainable Design. And they'll actually be the folks giving the presentation today, just a few moments. Before we get started, I just want to let everyone know that there's going to be a poll, which you will see or already should be seeing. There it is, just popped up. And we have two questions for you. Of the two different programs, or both, that fall under our tax credit program here in Maryland, we have a residential, so if you live in the house, or a commercial, sort of your Main Street type business place. Which of those two are you most interested in? And that'll help us sort of decide how much weight we put on either one of those during the discussion. And then the second question that we will have up for the poll is, where are you located in the state? So we have a better sense of who we're talking to and where you're located. And so you'll have an opportunity to plug in that information here in a moment. Also, there are documents that you can take a look at on the control panel. They're Adobe PDF files that are some of the things that we're referencing here today. Now, if you have any questions during today's webinar, you can easily type those over in the control panel in the chat function, and you can ask a question there. Or if you come up with a more in-depth question or you think of something later, you can always email Ellie Cowan here at Preservation Maryland, who is helping host today's webinar as well on our team. And she can be reached at ecowan, and Cowan is spelled C-O-W-A-N, at presmd.org. And if you forget that, you can just go to the Preservation Maryland website and you can find all the staff members and information about us there. And of course, many of you probably found us through our Facebook page, but we're also on Facebook, Twitter, Instagram, YouTube. We're all over the place. And we happen to have, I will mention as a last little tip in here, a weekly podcast. So if you're interested in preservation, we have a podcast called Preservecast that is posted weekly. So lots of fun, interesting ways to interact with your state's history and historic preservation. So without further ado, I am going to turn this over to Nikita Reed at Encore Sustainable Design to talk a little bit about Maryland's Historic Tax Credit Program. So Nikita, if you want to take it away.
All right, well, thank you, Nick. And thank you all for voting on which homeowner or which tax credit you're most interested in. It looks like 59% are more interested in the homeowner, 9% in commercial, and 31% in both. And Ellie, if you want to go ahead and put up the, there we go, the next poll question. So if you go ahead and take a couple seconds, answer which region of Maryland you live in, we'll get a sense of who we're talking to. All right, and we'll close the polls in 3, 2, 1. All right, so a lot of people from Central Maryland. That's great. Good to know. Well, thank you for that. All right, so Ellie, if you want to go ahead and transfer it over, I will start sharing the screen. Hang on one second. So here's photos of me and Ward in case you're curious what we look like. So we are both licensed architects, trained preservationists, and we've actually done this work multiple times. We've helped numerous clients receive more than $50,000 in historic tax credits for various programs. Our contact information is listed below our photos, so please feel free to email us if you have any questions, as well as feel free to chat questions at us in the box on the control panel. And so, on the handouts that you downloaded, there we go, sorry. There are some acronyms. There are the definitions of the Secretary of Interior Standards for Rehabilitation, which is even though there are 4 guidelines from the Secretary of Interior Standards, the ones that are for the tax credits are specifically for the rehabilitation. So this is what the handouts look like. This is the quick reference. Preservation has a lot of acronyms. So as we're talking today, if you are curious what MHT or SOI or HTC, what any of those things stand for, you can refer to the handout. And then a certified historic structure, that is the building, it has to be at least one of the following. So either it's individually listed on the National Register of Historic Places, it's a contributing resource within a National Register Historic District, or it's locally designated as a contributing resource in a local historic district. And all of these things apply to buildings that are pursuing historic tax credits. In terms of green infrastructure and green technology being added to buildings, so the bottom paragraph here talks about how solar panels, wind turbines, or other green technology could potentially be used for the historic tax credit, and it depends on whether or not those systems are integral to the working of the building. And so that's on that handout. The next page of the handout, there are costs that are usually eligible, the qualified rehabilitation expenditures. Those are listed on the left-hand side. And then costs that are usually not eligible are listed on the right-hand side. And some of those things include acquisition, landscape, furniture, things like that. And then, of course, these are the Secretary of Interior Standards for Rehabilitation. And then the last 2 handouts are ones that are directly from the Maryland Historical Trust. The orange one is about the small commercial tax credit, and then the blue one is for the homeowner tax credit. And again, all of these are PDFs that you can download from the control for your reference. So let's get into it. So what we are going to talk about today, the learning objectives for the course, are going to be what properties are eligible for the state and federal tax credit programs, what projects and expenses are eligible, as well as what are the basics of the Secretary of Interior Standards for Rehabilitation, and as well as how to prepare the tax credit application, which is going to be the most helpful for anyone looking to do this work. Things we're not reviewing today, I think that's equally important. We are not going to talk about the Section 106 review process. We're not going to talk about local historic credits, since there are numerous cities and counties across the state, which will have various ones. And then we're also not going to talk about the federal 10% investment tax credit, since that does not apply to historic structures. So here's some examples of the historic tax credit applied. So these are the afters of what some of these buildings look like. So from a small commercial in the top left to some multifamily in the middle left, the top middle, as well as some commercial at the bottom. But this is what they look like before. So we always like to make sure people realize that the building does not have to be in great shape or beautiful or done even to pursue the historic tax credit. Oftentimes, the more work the building needs, the more strength the application will have for pursuing the tax credit. And some tax credit basics. So the building needs to be a certified historic structure, which is what we've already reviewed. And for the state and federal historic tax credits, they are claimed by an income-producing entity over a 5-year period. One of the big caveats with the historic tax credit program is that any design changes on the interior and exterior They need to be reviewed by the Maryland Historical Trust, and those changes must adhere to the Secretary of Interior standards. The design changes, if they do not conform to the Secretary of Interior standards, then there's potential for the tax credit to be denied or even recaptured. There are different applications for local, state, and federal tax credits. So even though it's similar applications or similar information, the application forms themselves are quite different. Applications typically have a part 1, 2, and 3. And a very important thing is that no work should begin, and by work we mean no construction, should begin until part 2 of the application has been certified by the Maryland Historical Trust or the National Park Service. Here's a matrix of the different programs that we're going to go through today to give you a better sense of which program could be applicable to which project. So if you are a homeowner, then you could apply for the Maryland Homeowner Tax Credit, but not for the small commercial, the state competitive, or the federal tax credits. If it's a small commercial tax credit, you could apply for obviously the small commercial one, but not the homeowner, not the state competitive, but you could also do the federal. So the important thing about this one is that you can do the state tax credits and the federal tax credits and combine those together. And same with the large commercial tax project. So that's one where you could apply for the state competitive as well as the federal. And so for the large commercial, so let's do some of the program comparisons. So for the homeowner tax credit, you can receive up to 20% of your QREs. You can refer to the handout for what is eligible for that. It's a non-competitive process, so you are not competing against other people who are also submitting a homeowner tax credit application. There's a rolling application submission deadline, so you can apply anytime during the year. For this tax credit, you have to have a minimum of $5,000 of eligible expenses to qualify, and you can only recoup $50,000 within a 24-month period. And MHT typically takes about 30 to 45 days to respond to applications. Moving on to the small commercial tax credit, it's similar to the homeowner in that you can still receive 20% of the QREs. It's not competitive, rolling application submission. And this one for the small commercial, your QREs can't exceed $500,000. The property must be income producing, and no more than 75% of the building can be used for residential rental purposes. So for instance, if you had a shop on the ground floor and then some living above, that could be fine as long as the residential piece does not exceed 75% of the building. For the Maryland State Historic Tax Credit, which is also known as the state competitive one, this one you can receive up to 25% of the QREs, and that extra 5% really applies for if you are doing a high-performing building and pursuing a LEED Gold or higher. It's a competitive process, so that means you are competing for the tax credit with all of the other applicants who submit the state competitive at the time. Each credit is capped at $3 million per project, and just for reference, the entire program typically has somewhere between $10 million to $13 million historically. And this year, actually, I think the budget has decreased to $9 million, unfortunately. There's an annual summer application that all projects that are pursuing the state commercial competitive tax credit have to be in by. The building must be income producing, and then the awardees are typically announced by the governor in January. For the Maryland State one, nonprofits can use this either through syndication or actually they can just get a refund check back from the comptroller. So if a nonprofit is applying for the state historic one and they don't have a tax liability, they'll actually get a check back from the comptroller. And then finally, the last one is the federal historic tax credit, which is similar to the small commercial, where it's 20% of QREs, it's not competitive, rolling application submission, it must be income producing, and there's still the typical response time of 60 to 90 days. And this is another one that nonprofits can syndicate if they would like to use it. So the agencies that are typically involved in the tax credit process are the Maryland Historical Trust, since they are Maryland's State Historic Preservation Office, the National Park Service for the federal tax credit, and then, of course, the IRS and the comptroller, since they are tax credits and those are tax agencies. So how does all of this fit into the design process? The what you're seeing right now is the typical design bid build flowchart. So you would start with schematic design. If you had an architect, then you would go get that client approval. Then you would move on to design development, get approval, move on to construction documents, all the way until you were able to submit for building permit, get a contract from the general contractor, and then start construction. You know, there's a lot of things that happen between design and construction in a typical process. When you add historic tax credits into the mix, there are some other go, no-go decisions that need to be made before you go along. So after you have the concept together, then you would want to get the client approval and then review that concept with MHT. You want to make sure you've done research on the property, you know whether it's going to be determined eligible to receive the tax credits, what's the significance of the property, and also what are you planning to do with the property. After you get a preliminary review from MHT, then you would decide, okay, is it worth doing the historic tax credit? Because there are some times when you'll want to add an addition or you'll want to do something to the building that MHT may not approve. And so that's when you want to have that conversation early on. After you get into design development, that's when you would start submitting the part 1 and the part 2 of the tax credit application, because you want to submit the part 1 and part 2 early enough where you can hear back from MHT before construction starts. And so ideally you would have the response back from the historic tax credit application before you're moving into construction documents. And then that way, by the time you get to bidding and hiring a general contractor, you'll know exactly what's allowed. The part 2 will already be certified, and then you'll be good to start construction. After construction starts, you'll go through you'll document everything, you'll submit what's needed in terms of documentation, and then you'll photograph it when it's completely done, and then submit to part 3. And Ward will go into more of the application of how the submission works at the different phases. So with that, I'm going to pass it on to Ward.
So what we're going to talk about now is some examples of actual projects that have been completed. So the first one is what was originally a schoolhouse and then was a sailmaker's law for 50 years and was in poor condition when we started. So the first step is to do the research of the history of the property. In this case, it was in a historic district, but not a national registered historic district. So we had to do some research to demonstrate its eligibility. The next step was to get into the schematic design. So first we did measured drawings of what the existing conditions were there. And then we did the design of what the proposed was. And in this particular case, which one is back? Yeah. So in this particular case, you can see in the existing, the second floor was still a big open space as it had been as a single classroom. And the first floor had become kind of a rabbit warren of spaces. And there was a one-story addition on the back that had a dirt floor. It's not growing. You gotta close that. So we reconfigured the first floor. There's kind of an upside down house with the main living spaces on the upper level, and which was kept essentially as it was, and with numerous changes on the lower level and an addition on the back. So the first part of the part 1 with the application, and this just has the basic data of who owns the property, how old is the property, how big is it, and so forth. Then included in the part 1 is they want 2 major things. One is, why is this historically significant, and what is the description of the property? So they want a detailed architectural description of it and a historical demonstration of why it's significant. In addition, in part 1, they want documentation photographically of what was existing. You can see the rear elevation had no windows or doors facing the water, because who'd want to look at that? And the whole building was covered with aluminum siding. They also want detailed photographs of conditions of the various kinds of elements, both damage that needs to be repaired and windows, doors, interesting interior trim, and so forth. And then overall pictures of each space in the building to show what its situation was. Second part, part two, and they strongly encourage you to submit both parts at the same time. Part one is, well, why is it significant? What its existing condition is. Part two is, what are you going to be doing? So this is an example of just one item. In this case, the piers, the brick piers that held up the building, and they were nothing special. They were in good condition, but because the building was in the floodplain, the building had to be raised 3 feet. So this is the sort of thing that MHT wants to know ahead of time so that they can evaluate the impact on the building. In this case, it was critical to the building going forward. And then during construction, you can see on the left the building with some of the aluminum siding stripped off, and then certain things get revealed, like this incredibly rotten sill sitting on top of this pillar. So sometimes during construction, you discover things that might alter what the scope of work is. So you have to go back to MHT and say, well, we're going to repair the sills. So you can see the repair work that was necessary on the left-hand side. And then on the right-hand side, the framing of the new addition. Now, the addition was not eligible for the tax credits. It only applies to the existing historic fabric. And then here's some after photos of what the building looked like on the outside. And then that space on the inside on the left is the after photo, and the right what the before photo was. So this was a homeowner tax credit. Then as part three is all done, you want to ask for the money. So this is the certification application. You can see, if you look at the date, you see, as shown on this form, that it started in 2001 and ended in 2005. Well, that was kind of a problem because you can only get your return on expenses within a 2-year period. So the form is actually not correct. But here is where you're calculating what the total amount of your expenses were. The total allowable credit was only is on a basis of $250,000 of expenses, which 20% of that then equates to maximum $50,000 within a 2-year period. So similar to this is the Maryland small commercial tax credit. So this example is a building that was built probably around 1824 and expanded with many different additions over the years. It was in a commercial area. The second floor, the photo on the right, had been completely gutted by a previous owner and took out all the original trim and so forth, whereas the first floor had some of the original materials there. And this is just a shot to show you all the many, there's 6 additions on the building over time, and plus a shed there. But one of the interesting things with the small commercial tax credit, you can get both a tax credit from the state and from the federal government, which can be added together. So this is an after. You can see in this particular case, we were able to save the floors, the original doors, but we didn't try and guess at what the original trim was around the windows and doors, because that would be conjectural. So we just used something really simple there. And then this is a view of the front of the building after the construction work was done. You notice the new fence, that had to be reviewed and approved by Maryland Historical Trust, but the costs for the site work aren't eligible for the tax credit. That's one of the rules. So there are certain things that are eligible and certain things that are not eligible for the receiving the tax credit. And then when you submit the Part 3, they want a very detailed summary of what the various costs were. So this is a very partial spreadsheet. On the left-hand side are the check numbers, then the date of the check, then who it was written to. And then the fourth column, you see there's a bunch of numbers. Those refer back to the Part 2, where you've numbered each feature of the building. So some work you do may apply to all the features, and some work may only apply to one or two features of the building. And then they want to know a brief description of, well, what was the work that was done. And then the last three columns are what's the total expenditure amount, what's the qualified expense that you can get a tax credit for, and then what are the unqualified expenses. So, for example, the fence I showed you was one of the unqualified expenses. So then you total those up. And then there's also some lines for other sources of income, which be, for example, local government funding or insurance proceeds. Say you'd had a fire and you got money from that. Those sources of funding would be deducted from your qualified expenses that you come out with at the bottom. So the very last number at the bottom then goes on to the front page of the Part 3 to ask for your tax credit. So, Nikita, do you want to explain the calculations here?
All right, so to give you some numbers and put this a little bit in context, let's say for the small commercial tax credit, you had $500,000 of eligible costs. And then you knew for the small commercial, you could get 20% of those eligible costs would be eligible for the tax credit. So that's $100,000. There may be some tax credit related costs in terms of lawyers or accountants or anything like that, any soft costs to do the paperwork for the tax credit. That stuff would be eligible to be part of the qualified rehabilitation expenses, but that would still end up netting the tax credit to you about $80,000. So we just wanted to put one simple slide in here to kind of show you how the numbers would work out and what the net tax credit benefit would be. So with that, I'm going to go ahead and continue on to the state competitive tax credit. And for this one, there are some stipulations for this program which are a little bit different than the other ones, particularly that no more than half of the program budget can go to projects located inside of Baltimore. So for instance, if the budget is $9 million, then no more than $4.5 million can go to Baltimore projects, because we want to make sure that the money is being spread across the state. And just for your reference, for fiscal year 17, 8 projects were awarded out of more than 15 that applied. And then you get the extra 5% for high-performing buildings. So this is the one where instead of 20% eligible of the QREs, it's actually 25% eligible. And that's for buildings that are LEED Gold or equivalent. So we wanted to give you some examples of previous winners before. So here is the packing plant in Cambridge. And this is the before shots of this project, the St. Peter's School in Baltimore, and then also the Casa, Maryland project in Hyattsville. So very different parts across the state, but the buildings on the interior are all in not great shape. One of the jokes that we have in the office is that the state competitive is often the ugly contest, because the worse shape your building is in, the more competitive it is to apply for the tax credit. There is a desire to see buildings brought back to life and to really show that the tax credit is making tangible good in different communities. So that's why they're looking for buildings that are blighted and in bad shape. And here's an example of a previous winner where we were able to renovate the interior. So you can see the before on the left and then the after on the right. And so this is now the headquarters for Casa, Maryland. So one of the things that we've mentioned a couple times is that you can syndicate a tax credit if you are a nonprofit and you're looking to be able to utilize the historic tax credit. Obviously, nonprofits don't have a tax liability, so they're able to partner with a tax credit investor, where the investor would then give equity to the project, so give funds to the project, and then they would take the tax credit out. This is a slide that tries to simplify the relatively complicated process of syndicating a tax credit. but we will leave this up for just a couple more seconds, and feel free to contact us if you have more questions about this one. So let's talk about what happens when we are doing just the state credit. So for this one, let's assume we now have eligible costs of $1 million. And then we're going for the 25% state tax credit. So we could get basically $250,000. And let's assume that there's about $40,000 of tax credit related costs. So there would be a benefit of $210,000. But let's assume that you are a nonprofit and you wanted to syndicate it. So you could potentially syndicate that $210,000 to an investor where they would basically buy the tax credit for 90 cents on the dollar. So potentially it could be that you would get $189,000 from an investor to go into your project. And I should mention that this is, if you were doing this for the federal tax credit, that's also where you could syndicate it. If you're doing it the state, you may not even have to syndicate it. You could just get a refund check back from the comptroller. All right, so then, go back one. So for the federal tax credit, it is very similar to the state tax credit. And we're going to go on to just the 20%. And in this one, it's the same process and it's really the same information, but there are completely different applications. So a lot of times what you'll do is you'll copy all the information from the state historic tax credit application and you'll move that on to the federal historic tax credit application. And so seeing the numbers again, taking that same $1 million eligible cost project from the state one, if you were combining the state and the federal tax credits together, you'd still have some tax credit related cost, but your net benefit would be that much higher. So it could be $410,000. And then if you were to sell that to an investor, then that could be potentially $369,000 in equity to the project to get the project going. And so one of the things that we wanted to go over, just because we know that was a lot of information, very quickly. So we wanted to give you a conclusion of just the pros and the cons. So the tax credit is a dollar for dollar tax credit. It's not a deduction. And there are lots of benefits to renovating blighted historic buildings in various areas around the country. Some of the cons are that the agency, being MHT, they do have review of the interior and the exterior of the building. So any changes you want to make, regardless of if you're pursuing the tax credit on those changes or not, would need to be reviewed with the agency if you're getting tax credits on another piece of the project. For the state and the federal tax credits, there are 5-year restrictions on changes after the design is finished. And then you will pay income tax on the various credits. So if you get the state tax credit, you pay federal income tax on it. If you're getting the federal income tax and federal tax credit, you pay the state income tax on it. So there are some nuances that you would want to review with your accountant and talk to an accountant who's eligible and familiar with historic tax credits. And so to review the process, and actually I'm going to pass it back over to Ward to go ahead and do that.
Yeah, I just want to make 2 quick points. One is you can apply for the federal tax credits without applying for the state credits. So, for example, if you had a large commercial project and you didn't make that year's requirement to get the state one, you could still get the federal one. The other is that this is a credit against taxes owed. It's not a deduction. So if you owe $1,000 of taxes and you have $1,000 of credit, they equal out. So thank you.
All right, so you can see the process on the left-hand side. And so after you assemble your team and you figure out what your estimated tax credit value is, you'll make sure to document the historic significance. You'll prepare your parts 1 and part 2, submit to the Maryland Historical Trust. You'll start construction after you get parts 1 and part 2 approved, and then you'll prepare your part 3 after construction is complete. And then it's the tax credit you would use on your income tax returns. So with that was a lot very quickly, but we're going to go ahead and leave up the different logos. So thank you to Preservation Maryland for having us on for this one. Maryland Historical Trust, they are great in terms of answering questions and being a resource for you if you have tax credit questions. and you can contact them through their website there. And then we also have Energy Services Group listed. They are an organization that does energy audits and for your existing building. So if you're curious if your building is leaking or what sort of green improvements you could do, you'd want to contact them and then potentially see how any of those improvements could be wrapped into your project process. So with that, I will go to the chat box and talk to Ellie. Are there any questions?
So this is Nick,
yes.
and I can.
Oh, sure.
Oh, go ahead, Ellie. I'll let you do it.
Oh. Okay. Yes, we have had some questions, and Nick and I have been trying to answer some of them. But we have one from Patricia Bentz from Preservation Alliance of Baltimore County, and she's asking a question for a constituent of hers, and that is, do you need to provide both front and back of the checks? I believe in the application.
Yes, the answer is the requested, of course, if you're like me, my bank doesn't give me the front and back of the checks, but they are reasonable in that, but they do want what I used in a recent project was simply the photo, not the check itself, but the photo copy that they gave me with the statement. But of course you can go and request that these days. So yeah, I think that answers the question.
Okay, great. And then we have another question from James Lee. He is wondering, what is the ratio of tax credit to what you may be taxed for income on the tax credits? He thinks that seems like a disincentive.
So the way it works is when you get the state credit, you pay federal tax, and when you get the federal tax, you pay state income tax on it. So depending on what your tax rate is, say you're in a 20% bracket, you would be, that does lower the benefit of it, depending on which you're getting, the state or the federal credit.
Okay. And then if that wraps that up, we have another question. If the project will only affect the exterior, the facade of the building, are they still required to submit photos of the inside of the building?
Yes, they still want to see everything because they are going to come look, or at least look at the photographs of before and after of the interior, just to see that there wasn't other work that you decided to do later that might not have gone through the approval process.
And then we have another one, lots of questions. This is great. What happens if your tax liability is less than the credit?
For the Maryland tax credits, for the homeowner Maryland tax credits, then the state will write you a check if you're not using all of the tax credit.
Okay. And we have another one here. Are you required to use a licensed contractor versus a craftsman in preservation?
The programs don't address the legalities of building permits and contractor licenses and so forth. There'd be other regulations that would do that.
Okay. And we've gotten a number of questions asking whether this information will be available after the webinar, and so we will be making a recording of the entire webinar as well as the handouts and hopefully the PowerPoint, if Encore is all right with that, available on our website, and we will send out a follow-up email to everyone who is registered for today's webinar with a link to that information, and it'll also be available on our website, which is presmd.org.
Great. And Ellie, there's one other
There's a couple more questions actually coming in too.
Oh, great. All right, well, then while more questions are coming in, I might answer one question that we've gotten a couple times during the live webinar, or the live workshop. And the question is, can I use the homeowner tax credit on a property if I don't live there? And so the answer is that you can use the tax credits on your primary or secondary residence, but not on your rental. So if you own a couple different properties that you're renting out, you want to be able to use them on that.
You might want to also address the question of what if you sell your house?
Oh yes, that's another one that happens. So for the state, the small commercial, and the federal, you are limited within a 5-year time frame of making changes. And if you do make changes within those 5 years, then there's a potential for the tax credit to be recaptured on those particular ones. However, on the homeowner tax credit, if you get the tax credit and then you sell your house because you get transferred or for any reason, you do not have to worry about getting the tax credit recaptured. It's fine. You can get the tax credit and sell your house, although I should put that caveat that MHT does not recommend that. They would want you to stay in your home after you get the tax credit, but you're allowed to move after you get the tax credit within that 5-year or 2-year period.
And then another question that we have here is if I do the work myself, can I get credit on the materials?
Definitely on the materials, but not your own labor.
Okay. And then also, how long does it usually take to get the check from the state for the MHT credit?
Well,
residential credit?
It has to do with when you are filing your returns. If you file your return on April 15th, that may take a couple of months, but it's not, typically, in our experience, a very lengthy period of time.
Okay. And can a tax credit be used for exterior painting? The painting project does entail numerous exterior repairs.
Okay, so that gets into kind of the gray area. It's not intended to be for just regular maintenance. For example, just repainting your house. So it's if you're doing the entire exterior, for example, you're replacing the roof shingles and doing some carpentry repairs and painting it, then you're more likely to be eligible.
Okay. And how we have some questions about how can I tell if the property is located in a local and or national district? Is there somewhere online to find this?
Yes, there is. And actually, so you can go to MHT's website and search their Maryland Inventory of Historic Properties, or you can even go to Maryland Medusa. I believe it's MDMEDUSA, and that is a cultural resource website where you put in the address and it'll tell you just about everything you wanted to know about that property.
And in the follow-up email, we can include some links to those sites for the folks who've joined in with us today. And then another very good question: how do these credits dovetail with energy efficiency or solar/PV credits?
So they are separate. In terms of being able to try and get historic tax credits for any solar panels or anything like that, it would only be applicable if your building would not work without the solar panels. For green technology to be eligible for historic tax credits, the technology has to be integral to the building, in the sense where the building will not work if those systems weren't in place.
But it's conceivable you could put solar on a historic building even if you weren't getting the tax credit for that portion of it.
Correct. And of course, you'd want to check with your local historic district commission and any other local regulations to verify that would work. Yes.
And this is Nick, and I thought I would just pipe in when you say you should check in with folks. And in any case, anything that has to do with taxes, although we are providing some information here, it's informational only, and you should always talk to a tax attorney or someone who does your accounting to make sure that this is going to work for your particular situation. And obviously, always talk to MHT early and often in the process. It's very important that you do all of those things. We're only providing information, but not tax advice.
Correct.
Right. And we have two more questions here. So will will MHT accept evidence of payment to contractors' invoices, i.e., can we pay contractors in cash?
Well, that's a good question, but they do ask for documentation. You might have to get a statement from the contractor or something. I would forward that one to MHT, to Megan Clemmer, one of the other great staff people there, to check on that one.
Right. Right. Okay. And then the last question, and I think we sort of covered this, but so if I live in my house and I have 4 rental units within that house, does that still qualify?
Yes. So then you're renting out your house. I'm just trying to make sure I understand the question. Like you're renting out rooms in the house?
I believe that's what.
Okay.
This might be a question that we want to answer. I was just going to say maybe we could get that person to email us, and then we can try and handle that one in depth, because it sounds like it's a little bit more complex. So why don't we take that one offline, and we see Bruce White was asking that one, and we will be in touch with him.
And then this is how does MHT handle documentation of payment to contractors that were done via a bank renovation loan?
Well, usually a bank renovation loan, the owner pays for the work, and then the bank reimburses them. So there would be the normal paper trail of the payments in those situations.
And that's another question that if Claudia wants to follow up with us by email, we'd be happy to continue that conversation offline. We've gone about 50 minutes now, and we greatly appreciate everyone listening in. We kept a good chunk of you here to the very end. And if you have any further questions, feel free to follow back up with us or our friends at Encore Sustainable Design, who might be willing to take you on as a client if you have a project in mind. And we will be sending, as Ellie mentioned, a follow-up email with all the information and links and contacts that you may need to take this on. And again, as I say, this is just all informational, but we hope that it's opened your eyes to a potential source of funding for taking care of and investing in historic properties. And we hope to have you on the next webinar, which will hopefully be in the not too distant future on another interesting topic, and hope to see you at a Preservation Maryland event in the near future. Thank you everyone for joining us today, and have a great day.